Welcome back to another video for HarborFinancialOnline.com. Today I'm going to be talking about some tax deduction tips and different ways you guys can increase your refund and pay less tax during the year. So I'm going to get the video going here and we'll go through all the small and bigger areas of tax deductions that you can qualify for. So the biggest deductions you can get out there come from itemizing deductions on your tax return. You have the choice to either use the standard deduction or to itemize. You have two different ways to go when you file your taxes. Itemizing is going to give you the biggest amount of deductions that are out there. When you itemize, you're going to complete Form Schedule A, and this schedule is attached to your regular 1040. Okay? With Schedule A, you can deduct items like medical. You can follow me on the form here. Medical, dental, taxes, mortgage interest, donations, and there's more. I'm going to go into the other deductions throughout the video, but some of those are some of the biggest ones. You can also deduct state and local taxes that you pay during the year. You can deduct taxes paid on boats, vehicles, and motorhomes. Make sure though that actually what you paid on these items is going to match what you report on the taxes, because they may want verification at some point. So make sure that you're saving those receipts, saving those records, anything that can prove that you paid that exact amount. Now you can deduct taxes that you may have paid to a foreign country. Say that you move to a foreign country, you live there for a while, you pay some taxes, that's going to all be deductible. You can deduct sales tax paid on large purchases. Now, there is a new deduct just this year for new vehicle purchases. That tax that you paid can be fully deductible, but it has to be reported, exactly to what the records you have show, because what they're going to want is the actual purchase price of that vehicle, the sales tax rate in your state, and the exact amount you paid. So make sure you're right on with that. Donating to charities can result in big deductions. You can give cash, property. This is the places you can give to. You can give cash, property to religious and educational organizations. Now the one thing that I didn't put in here I want to remind you is you can deduct mileage to and back from these places that you're going to make your donations. You'll get a 37 cents per mile deduction, as you travel to make these donations. Same thing too, say that you're traveling to a church and you're going to work in the soup kitchen or do something like that. That mileage in there is all going to be deductible. Say you brought some food for the soup kitchen, the cost of that food that you paid is going to be fully deductible as well. Now if you own a home, you definitely want to do the Schedule A, because you can deduct any mortgage interest that you pay during the year. Now if you read here on the second line, it can be from your mortgage or from an extra line of credit you received. So if you took an extra loan out to say do home improvements, that's going to be fully deductible as well. Look for work expenses that you are not reimbursed for, such as mileage, travel, meals, and entertainment. If you're traveling for work, I don't mean just getting to work and back, but say you're traveling out to meet clients and you're not getting reimbursed by your employer, you can deduct that mileage. You'll get the 37 cents per mile. But if you're an independent contractor for a company doing this, say you just get a 1099, you're not an employee, then you can't deduct that for those wages. There's more rules on that if you owned a business, but if you're a regular employee, you get the W-2, you're traveling to clients, not getting reimbursed on that mileage, it's fully deductible. Same thing goes with any other travel. Say you're flying to meet clients and you're not being reimbursed on the cost of those tickets, you can deduct that. Meals and entertainment. If you paid someone else's tuition, that can be deducted. So if you're paying your child's tuition, any of that tuition, books, housing, all that, you can qualify for a deduction. Okay. Now I want to take you to our website real quick, harborfinancialonline.com. On our site here, you can do a quick estimate of what your taxes might be and what your refund is going to be. And we have on the left here pages dedicated to all the deductions and credits out there. And a lot of the topics that I just talked about are going to be over here. Mortgage interest deduction, a full page devoted just to this, to see how much you can report for that. Let's go down here, all the tax credits, all the deductions for homeowners. And just this year there is the credit for buying your first home. And actually even if you have owned a home and you bought a home in the year, you can still qualify for a credit, but it's just going to be a little less than the first time home buyers. So check our website out, harborfinancialonline.com. Let's go back to the video. So I appreciate you watching the videos. I have lots of videos out there and credits and deductions and ways to increase your refund. So go to YouTube, just do a search for Harbor Financial Online, and you'll see all our videos. I appreciate you checking it out, and check out our website, harborfinancialonline.com. Thank you.